now I would move on to Rehmat yourself. So you also one of the larger lenders in the SME and agri spaces in Pakistan. And also you have been able to take a lot of advantage of the feet on the street model that Nasser has just talked about. But despite all this, obviously we do see pockets of excellence, we do see pockets of penetration, but we talked about the overall penetration level in Pakistan is very low. So what do you think, which enablers would you suggest for adoption at an industry level and also for adoption by the regulator to really push this through? Although we have been hearing a lot about some things happening at the PBA level and also at the regulator level, but from a banker's perspective, what suggestions would you like to make? And also, we did talk about the loss sharing and credit protection schemes being introduced over time, and the utility of those schemes, whether or not these have been helpful in accelerating the pace of adoption. So, what are your views around these, Rehmat?
Thank you, Faraz. It's tough to follow on Nasir's conversation, but let me try to give some perspective. I think if you look traditionally at the SME model and how banks approached it, and at National Bank also, we used to have a prerequisite to SME financing in the traditional sense, where we required businesses to have a relationship with the bank for X number of months to be able to assess cash flows and to be able to assess volumes of business and to establish a relationship and the character assessments that were needed. I think the single most important part on that, or the impediment to that model's growth was the fact that SME borrowers, potential borrowers, they wouldn't open bank accounts that much. Cash being cash, it was more about cash deposit into bank accounts, and therefore that behavior and that assessments took a longer time. Now, so the introduction of the digital mechanisms, which are convenient, the P2Ms and the various other modes which enable small businesses to digitally transact with each other, that have come in the past some years, that have made it easier for those businesses where this adoption has taken place. But the fact that our currency in circulation to M2 ratio remains very high indicates that still there is a preference not to transact through the banking channel, but more through cash. I think the single major change that has to take place, and part of it has to do with the banks themselves, and part of it has to do with the SME businesses, is that the banking channel is a necessity, almost a utility. As Zafar, I think, mentioned for Nadra, that to be able to do business, you have to have a bank, and you have to have a banking access and banking channel, just to enable your business to grow faster than it would if it was purely driven by an equity-based mechanism. That understanding of businesses and the convenience of opening bank accounts and using banking channels to receive payments and to make payments, that will be the single biggest driver for the growth of SME loans. Because once that banking transactions take place, then almost the next step, or logical next step, is to make OD lines available to customers, etc. And the credit scorecards become very easy to put in place. And for that, I think really, and I do give credit, and I think HBL with Connect ourselves trying through our own digital app. That is the real thrust of the digital app usage and the digital wallet usage that the banks are headed towards. It is to democratize and make digital banking an option for the Aam Aadmi. Then you have an ecosystem which promotes the lending part. The transactional part has to precede the lending part if you want to see a large growth in this area. I do think one important area, and I made this point before at another forum, is that really when we talk about 550 billion SME loans outstanding for the banking system, I think there needs to be a relook at how we as bankers define an SME versus how everyone else, आम फहम SME को define किया जाता है. And by this I mean that there are three essential criteria for an SME definition. One is the number of employees, the other is a turnover, and then from that, under state bank regulations, a certain percentage of the turnover is the loan amount that makes the loan an SME loan. And when you take all of that entire lending activity, that is 550 billion rupees. I personally, I mean, having the experience of looking at SME lending at National Bank, I really don't, I think there is a large, the significant need to take a relook at that definition itself. 200 million is the turnover per annum maximum for a medium enterprise and a certain number of employees, and a percentage of that becomes the maximum loan.
Yeah.
It is tough to look at that and apply it to the entire spectrum of SMEs that the banking sector is expected to cover. And I think, this definition was made maybe 5 years ago, 6 years ago, when perhaps the easiest way to look at it is the dollar was at a certain price. Today it's a different rate. So even if you're looking at exporting SMEs, a 200 million annual cap is actually pushing the bar downwards. Or in other words, what used to be an SME yesterday may not be an SME anymore, simply because the amount that the turnover due to an export volume has risen. So I think there is a need to relook at that and approach it holistically.
Yeah.
But I do see the importance of digital taking this entire thing forward as an enabler. Perhaps they may, for the foreseeable future, not be an option, not be an alternative to some human being making a credit decision. But I think that, but to make that decision faster is what digital will do in the short term for the banking system. Thank you.
Yeah, thank you very much.